What Alexandria and I are proposing in our legislation is something that is not complicated. It just takes us back to where we were a number of years ago, and that is that no bank in this country should have credit card interest rates of over 15%. So we're bringing back the concept of usury laws, where where banks cannot try to get blood out of a stone.
2020 presidential candidate and Senator Bernie Sanders teaming up with Congresswoman Alexandria Ocasio-Cortez on a new bill they say protects consumers and challenges Wall Street greed by capping interest rates on credit card loans at 15%. Now, with default rates on credit card debt at less than half of what they were about 10 years ago, is such a measure really necessary? What do you think?
Well, it's destructive, David. I mean, the prices are not arbitrary. I mean, they don't pick them out of the hat. Wages, commodity prices, and interest rates as well. They're not determined by feelings or whatever Bernie Sanders thinks of. They're actually determined by economics. And those high rates for credit cards are high because of the risk of giving people unsecured loans. A lot of those people, in fact, don't pay those loans back. So credit cards, if you pay them back, are actually a great deal. And these types of continued interventions in the free market only result in less credit being available for everyone down the line.
But what about the fact that there is a cap rate for credit unions at 18%? So why are they held separately compared to banks? And if we talk about just the amount of people that don't even have access to credit cards in the first place, if this rule were to go into place, it would provide, 30,000 post offices with the option to provide credit card rates or credit cards in general to lower income people that wouldn't normally qualify. And don't you want these people to go out there, start their business, build America?
The post office now getting into the post office now offering credit cards.
Well, they need to survive somehow, right? Or else they're going to go under. So why don't we give them another avenue?
Oh,
because they can't even pay back the loans they've already taken out, Christina. This is the whole point.
Actually, one of the reasons we have this seeming disparity between borrowing costs on banks and the charges on credit cards is because Congress, in their wisdom, passed a law, the Credit Card Act in 2009, which basically said you couldn't raise interest rates on existing borrowing. So what did the credit card companies do? They hiked the rates at the short end or the front end of the loan to make sure that they were not going to get caught out if interest rates began to go out. So you can thank the government for once again screwing up the effective working of the marketplace. This is true. And that's kind of where this big divide between borrowing costs and credit card rates began. But to Jonathan's point, it is completely the case that the essential reason why these rates are so high is because people default.
And not because these banks want a lot of money.
No, it's credit card companies mostly.
I'm not here to defend credit cards because I got to tell you, it takes Superman's vision to see the little letters at the bottom of your statement because you don't even know what the heck it says. But what I am here to defend are the free markets and free for businesses to do with as they do in the rule of law, and against two people that shouldn't even be running a lemonade stand. You have one person that stopped Amazon from bringing 40 to 50,000 jobs to Long Island City, and another one's that's proposed every tax and taking over the industries, and you name it.
Well,
and enough's enough.
I don't think it's entirely off topic.
We're talking about credit cards.
But we're also talking about the teaming up of Bernie and AOC, and these are two people who believe in socialism. They don't believe in capitalism. They've been honest about that. And if you don't believe in capitalism, you don't believe in supply and demand. I mean, as Jonathan was saying, there's a reason why interest rates are fixed at a particular point and move based on what happens to the market. It involves risk and calculations, and if you try to artificially stem that at some point, which has no relation to what the market is doing, you'll have chaos.
And
David,
you'll crowd
imagine if they were imagine if they were actually able to put in legislation on all the things they want to do.
Oh boy.
The economy would head south, costs would go up, and you know what's going to go into the crapper. It is simple as that. That's all I'm talking about here. We can sit here and talk credit cards from now to New Year's. My main point is business. Leave them alone. We're doing great without these people.
Gary, a quick question. Don't you think that maybe some of these banks or financial institutions that are providing the cards are somehow working together too, so that these rates continue to be high? They can
oh my gosh, no.
They can increase the annual APR rate anytime they like.
That is
We've
true.
seen
an
cards
idea.
26% and higher.
One of the reasons that
Hold on,
rates,
guys. Go
one of
ahead.
the reasons rates are so high also is because competition is so fierce in the credit card industry that they've all upped the rewards, and the reward costs have gone through the roof. So one of the reasons, seriously, is a competitive cost. And so,
I mean, you don't want to. If you don't want to pay high interest rates, pay your credit card on time.
That's
I
right.
agree. Yeah, we all agree.
Or don't even borrow.
There's just like
about that.
personal responsibility is kind of like, oh yeah, I
Yes.
totally forgot about that personal responsibility. That's the message these Congress people should be.
By the way,
putting
for the
forward.
record, 38% of American households have credit card debt. So it is a minority. It's a big minority, but it isn't a minority. And the minute you can pay them off, folks, pay them off because it's not a great deal.